Rajat Rajgarhia is also ready. Let's connect with him. Rajat, good morning. Thank you for joining us. Rajat, if I map the market environment, it's a situation of glass half full, glass half empty. Glass half full because large cap stocks are holding on, but glass half empty because mid cap stocks have caved in.
Hi, good morning. Well, I think, yeah, you're right, because if you look at the way the market flows have been behaving, this market has been held on very well by the large amount of foreign flows, almost $3.5 billion in this month on top of a $24-25 billion last year. And typically that money pours into some of the frontline heavy index names. While if you look at the domestic on the other hand, this month itself there have been sellers of $2.5 to $3 billion on top of $11 billion last year. And typically you see mid caps as a basket doing well when domestic money comes into the market. I think the valuation gap right now between large caps and mid caps have been expanding, and at some point of time mid caps will have to come and participate in this rally for these markets to hold on.
Rajat, hold on to that thought. Just minutes to go before we kickstart trade for today. Let me just recap the trading ideas coming in this morning. Mitesh, he's got a buy call on Adani Ports. India Bulls Real Estate is a sell call. Sell on Aurobindo Pharma, sell on FT as well as Godrej Industries. Sandeep Agle, 2 buys, Strides Arcolab as well as Axis Bank. Sell on BHEL as well as India Bulls Realty. Deepak Mohani, a solitary buy call, or actually 2 buy calls on Asian Paints as well as Jindal Steel, and recommends shorting Dish TV this morning.
One idea each from our technical experts. Mitesh, your number one idea for the day, and with the one line on it, why?
I think I would like to short a financial technologies below 1124. I think that will be a negative breakdown on the charts, and that's typically high beta stocks. If it changes direction, it could be a good and fast move.
Sandeep Agle, what about you?
Nikunj, I would go with a short or a sell in India Bulls Real Estate, mainly because IVRCL cracked yesterday, and normally this stock follow in line. So it started all with HDIL, then with IVRCL, and I think now India Bulls Real Estate can give you a downside move.
There's one bad day and bulls are running for cover. I mean, we just got sell calls from everyone.
No, I think it's been a series of bad days. The market is not reflecting, or the Nifty rather is not reflecting it. But I think last few days we have seen some strong selling happening across counters. Stocks like you've mentioned rightly mid cap and the high beta segment, which have been badly hit, and typically that will show some effect on the large caps as well. And my sense is that I think you will see some kind of corrective declines happening. We have not had a correction for quite some time now. We have had consolidation, so maybe some correction is overdue.
The good news here is that globally things are holding on. Dow is almost at 14,000, less than 2% away from an all-time high. European markets are looking okay. There is abundant global liquidity. The US Fed meets tonight, and the consensus on the street is that in all probability they are likely to extend the QE3 program, or the quantitative easing program. In December, Fed had flagged off that they could restrict the time limit of the quantitative easing program, but now some of the strategy reports I've read in the morning from Bank of America, Merrill Lynch, Goldman Sachs Global, they are of the view that the US growth is still anemic and the Fed will be forced to extend the quantitative easing program. Is that important? That is important because in Asia, Bank of Japan is printing money, in Europe it is ECB, and now it's US Fed. So central bankers are using innovative methods to kickstart the growth, and needless to say, global liquidity is intact. That's one plank. The second plank is the policy plank. The policy plank is also solid. News flow from New Delhi has improved dramatically. The finance minister on various forums pretty much has indicated that he's committed to deliver a tight budget. The third pillar is rate cut. And I think that pillar is looking slightly shaky because Reserve Bank of India clearly has made a case that now they need to balance growth and inflation. So that really could be a shaky kind of an pillar, and which to my mind will inject some degree of uncertainty. But for the day, Let's focus on Axis Bank. That was the star yesterday. Idea came out with numbers. Numbers were marginally below estimates. And then you got Titan and Delta Corp in the mid-cap space, which are due to declare numbers. And then you got Crompton Greaves, which came out with horrible and pathetic set of numbers. Irrespective of the restructuring, the business is just not turning around. 6065 for the Nifty. First rates on your screen. 16 points off for Nifty spot, which is the okay start. It's not a good start. It's not a great start, but it's a okay start. 72 points up for the Sensex. Idea Cellular numbers came after the bell, and let's see how markets are reacting to those numbers. 112 for Idea Cellular, but the basic story for Idea is that not what they've reported for the quarter gone by, what they will report in this quarter after the tariff hike. Where is State Bank of India? Where is Axis Bank? Let's check on banking as a group, banking as a cluster. State Bank of India yesterday caved in. Crompton Greaves 103, horrible numbers. It's good to see that for Axis Bank there is some follow buying. 1478 for Axis Bank. The QIP got a resounding response. State Bank of India is bouncing back. Good start there, 2482. So it's a heavyweight. You want names like State Bank of India, Reliance, Infosys to outperform if markets have to stabilize. 6069. Let's look at real estate stocks in no order, in no market cap. Just the big names now. Unitech, DLF, Anantraj, and then the smaller ones, which is Shobha, Brigade and Kolte Patil. So real estate is looking stable. There is a rub of green, no runaway rally, so to speak. So markets are okay. It's not a great start, but after yesterday's correction, anything above 6050 on the Nifty, I would say is a good beginning.
Glenmark Pharma, that too should be reacting to its earnings. We'll of course chat with the management as well and get you the exclusive views. 2% higher for Glenmark. Good going. 513 is where the stock is. Idea, disappointing set of earnings. Crompton Greaves is something that Nikun just highlighted. Blue Dart, watch out for this small cap. Excellent set of earnings, and the stock is as well appreciated. A good 4% in trade. This is going good. Torrid Pharma being the other one which is reacting positively to its earnings. You've got earnings coming in from Alstom, a disappointing set. The stock is down this morning. EIL as well has started off a little soft, and Binani Industries as well would come off your screens next. A disappointing quarter there again. GMDC, Pidilite, GNFC and Brigade Enterprises are some other counters which should be reacting to their earnings. A long list of earnings slated to come out today. Nalco out of the big boys, so watch out for what that is doing ahead of its earnings. Titan as well is slated to come out with its earnings today, so let's see how Titan is positioned as it steps into its earnings day. PFC, IOB, SR Shipping, Godrej Properties, Balrampur Chini. It's going to be an important day for some of these liquid mid caps. They're all slated to come out with their earnings.
Just looked at Astra International. This stock has got completely disseminated because of this promoter funding issues, and finally Astra is off the circuit. It is down by 3.5%, but it is at 37.2, so maybe it's off the circuit now. Arcom is up by about 0.5%. India Bull Real Estate is looking okay. Crompton Greaves 103, so it's not a vertical drop, it's a measured fall. I guess the insiders knew what's coming, which is that the turnaround for Crompton Greaves is still 2 or 3 quarters away. In terms of absolute price action, nothing which I can spot. Unitech, Suzlon, so risk is looking okay. That's about it. Rajat, what are your thoughts on real estate stocks? Because the street clearly is divided on how to approach real estate stocks. There is one camp which believes real estate stocks are cheap. There is other camp which believes that real estate stocks, don't go close to them because corporate governance issues are still large.
Well, I think there's been a fair bit of divergence in the performance of real estate stocks. If you see, some of the stocks have purely been valuation trades, because of which many of them are up 50-60% from their lows over the last 3 to 6 months. But from a business point of view, I think things are going to take quite some time before investors will start turning positive. I think the valuation trade has played out very well into the real estate stocks. The business case is yet to play out, but we don't see that playing out in a hurry because there are several other catalysts which have to come in place. I think the commercial real estate recovery is something which has to be watched out before investors start playing out the real estate stocks more from looking at an investment at this point of time, I think they are largely valuation trades. That's what we traded DLF also when we released a report about some time back at 210, 220, because we thought that at least a 20-25% rally into the stock is possible, which has happened now. But I think from here on, you will have to be positive on the business, and that evidence is still lacking into the system that for you to trade these stocks higher from here.
Rajat, what's the view on autos now? We've had a mixed bag of earnings so far, but do you think now with rates easing and this cycle hopefully continuing, that could perhaps bridge the gap in any demand shortfall?
But I think in autos, the four-wheelers will continue to do well, while you will have the share of volatility in stock like Tata Motors. I think Maruti is definitely looking for a much better FY14 on the earnings, and that's also getting reflected into the way the stock is doing well. I think M&M is another stock which should start looking interesting from now. It has been the underperformer amongst the three four-wheeler names, but if rates start easing off and we start seeing some pickup into the domestic space, the valuations are very, very attractive for this stock to start leading the next round of upgrade into the earnings and the valuations also. So within the four-wheeler, I think Maruti continues with the momentum, but M&M could be a stock which can start showing some comeback in the performance from here.
Crompton Greaves is really coming under pressure. It's almost 100 rupees for Crompton Greaves. It's coming down on very strong volumes. Now, it's not part of futures and options, which means there is some selling. And there is some delivery-based selling, which is clearly, creating pressure on that stock. Numbers were horrible. They were pathetic. They were way below estimates for 6 or 7 quarters in a row now. Crompton Greaves has disappointed shareholders. Rajat, do you track this one, or after disappointing numbers, you've also stopped tracking this one?
No, we are quite actively tracking this stock, and when I say actively tracking this stock, we are still unable to get hang of how the quarterly numbers are shaping, despite getting some guidance from them at the end of their every quarter numbers. I think it's almost becoming unpredictable to predict what kind of numbers they will report, because the numbers are making new lows and significantly lower lows every quarter. Almost for the last multiple quarters in a row, people have believed that maybe you have another 1 to 2 quarters of pain left, but that process is just getting extended. And more so on the offshore business, the losses are just continuing to mount. I think we will have to hear them in their con call today morning before seeing how much more plunge into the estimates we will have to make. But it is one of the most difficult stocks right now to form an estimate upon, going by their quarterly trends.
Well, I love your analogy there, that the stock is now making new lows and the numbers are also making new lows. So, Rajat, at the current juncture, do you think Crompton Greaves could be a great deep value stock? Buy it, hold it and forget it for 2 quarters, because when the business will turn around, the stock will automatically turn around.
That theory holds on well, but you have to be just certain that how much new or low you make over the next couple of quarters. If you look at the last 4 quarters, every time after the reported numbers, the stock has typically come into the band of 100, 110, which is where I assume it is there today also. But once they make a new low, then how much they recover from that on the earnings front, you need to get some good sense about that. We will make our estimates and then probably come up with a view on what prices we think investors should look at buying this name.
What about some of the media names, Rajat? I mean, we've been chatting on a constant basis and you've always liked some of these digitization plays. Do you think once digitization kicks in tier 2 cities, there is still going to be immense amount of value unlocking in these names?
But I think this will remain one of the most exciting sector for investors to be in, and not just the broadcasters, but also some of the print media names where we reinitiated coverage very recently. We think if you look at the balance sheets of companies like Zee, Sun, Jagran, DB. A lot of these balance sheets provide you a lot of comfort at the bottom at the bottom of their business cycles, and the managements have held on the payouts, etc., reasonably well. We are looking at a pickup in the ad revenue across businesses over the next 2 years, and plus if you get the kick from the subscription revenue, I think these companies can continue to trade at very expensive multiples with earnings growth where the upgrade cycle will continue and cash flows which will support higher payouts for them over the next few years. So as a space, both broadcasters and print media are the ones where we would remain invested in.
Give us your top picks in that pack.
Well, I think, of course, Z continues to be the top stock in that because the leader will earn the most out of this. And within the print media, both Jagran and DB Corp are the two favorites for us.
Couple of pharma names are looking hot. Strides 1090, Ajanta Pharma, that stock has been on some kind of tear. Rajat, at the current juncture, how is the risk reward ratio stacked up for Indian pharma companies? Now they've seen a run up, but if I map what some of the mid-cap pharma companies have reported for the quarter gone by, numbers also have been excellent.
Well, this quarter when we did the preview, pharma was looking like the best performing sector because two things which are working well for them. First, their business models are very robust right now in terms of growth. And secondly, I think the currency of 54, 55 is really helping a lot of these companies to deliver very well. Important to note, many of the Indian pharma companies had set up their capex for the last 2-3 years when currency on an average was 45, 46. And now when the commissioning is happening, they are realizing sales at a currency of 54, 55. I think that itself is pushing up the ratios significantly for these companies. And while we don't look at pharma as a generic sector, there are a lot of individual business models which stand out. Models like DV's, models like Dr. Reddy, Lupin, Cadila. I think each one is a story on its own. They have done very well as a pack, and we think that at least in individual stocks, there are case for making more returns from here.
Rajat, every time we interact with you, you always leave us with a multi-bagger idea. Last time it was iShare. Which is the new one this time?
Well, I don't know whether these stocks will be multi-baggers or not, but I think the business cycles are turning around for many of the stocks right now, and we should have an early entry advantage into these. If you look at the telecom stocks, I think there is a case that the business cycle is now reversing. How much longer the reversal continue, we should play that entire cycle. I think PSU banks as a basket, we are going to see the reversal of asset quality issues for them. So valuations for both these sectors are fairly attractive. And the third space, which I think again should do very well, will be the PSU oil companies, especially the upstream one. Companies like ONGC, I think we have, if we just model in every announcement into the earnings, then FY 14, 15, 16 could be years of big growth for them. And these stocks will trade at multiples that we haven't seen over the last few years because of various issues. So to sum it up, telecom, PSU banks and oil and gas looks like three sector which should do very well from here.
Okay, Rajat, good having you on the show as always. You mentioned telecom, so we will take a quick break and up next chat with Himanshu Kapani.